Good morning, everyone, and welcome to the European crossover webinar. And we'll take a look where the dollar index is, which is just basically flat from where it closed yesterday. You can see we'd actually gone and pressed into this 93.30 area, and then we dipped back to close just under 93. And basically, that's where we're at right now. We'll take a look also at the euro dollar. And the euro had taken a good little dip, but yesterday, and really left the door open for them if they wanted to test a little bit lower. Probably not unusual that they're up a little bit, but we can still weaken just a little bit. Maybe tomorrow, we'll see. But we have had a decent little sell-off. The market kind of holding close to these lows, but a little, just a hair bit positive today. We'll go in and take, just to take a quick look to the Aussie dollar. This has been interesting because we've actually posted a gravestone doji in two of the last three prior sessions, I should say. Look at that. So we're really open to potentially giving a little give back here. We'll go on and take a look at where we stand on the calendar. So we did have UK GDP, and let's go and take a look what we stood here on the cable. We've continued to weaken a little bit after getting that pop above 133. But we did have UK GDP. Also at the same time, we got manufacturing and construction output. Those numbers, if you look here at industrial output, pretty much came in line. Look at the GDP, but that would be for year over year. Look at this. Quite a bit of a jump in GDP now. If you look on here, they're looking for 15.5. They got 15.8%. But most of the numbers all came, look at manufacturing output, pretty much came in line for what they were expecting. And we will get business inventory investments, but that'll be at the bottom of the hour. And then at the top of this next hour, we'll get Eurozone industrial production. And as we come into the States, we'll get core CPI, or actually just CPI at 8:30 Eastern, as well as our weekly jobless claims. And that'll be pretty much it. Looks like there is an interest rate decision out of Bank of Mexico today at 1 p.m. And take a look here. We did see that move yesterday. Remember, we talked about this being, although the market was holding, we thought that it was holding, but from a weakened standpoint, and that we would potentially see a rotation lower today. And we did see that rotation again, actually in Asia. We saw, you can see here, we actually finished the session a little bit stronger. And then in Asia, we started to weaken. And we did all the way down here to the 2-day VWAP. And then we've seen a bounce. And we're just holding up above same-day VWAP. But we did get that pullback. We saw a pretty decent pullback, really overall, from where they closed on the in the U.S. session to dip back 120 handles before coming back. And we're just kind of sitting here. You can see right here, no big movement there at the time, but still was a decent little pullback from that level. You can see that 11,903. We shared that chart and spoke about that. This area, 11,903, which also was, I think on the 2 hour was 11,898, 5 minute 11,99. 899. So you can see here we were able to just stub above it, and then decent little pair back. We had a little gravestone doji, and we saw this slide here. Take a look at where we stand here with the S&Ps. On the S&Ps, they've actually held up as they've been doing a little bit better than what we've seen here in the NASDAQ. The moves have been a little bit more dramatic here in the NASDAQ, but overall the S&Ps held up well. Expand this chart to see. It's actually fared better than the NASDAQ. NASDAQ didn't pull off too much, but I'm saying is, once again, S&P seems to hold up better than that. And we'll take a look at the gold market. After that big drop, we still haven't had a recovery on here. Look at that. That was one heck of a fall. That was just humongous. And we're just kind of holding here. That is not positive because we did go and rally back. So you would like to have seen a better bounce. I think people have just gotten smacked on this, and pretty hard to get any kind of a semblance of a rally at this point in that market. We'll go and take a look at the news. The Australian dollar fails at chart resistance, and the New Zealand dollar pauses at 19-month highs. We talked about the New Zealand dollar. Remember, we got that resistance at 68.96. I think yesterday it got up to 69.03, but that 68.96 is a weekly closing level, and that's why I thought that was important. We even put an asterisk on the chart for that. The Australian dollar slipped on Thursday after once again fell in a key chart barrier of 73 US cents, while its New Zealand counterpart took a breather at a 19-month high. The Australian dollar was last at 72.72 after hitting a high of 73.19 on Wednesday. Technical analysis sees major resistance at 73 level. The Aussie has breached twice this week, but failed to sustain above. Data out of it earlier showed net migration of 45.30 in September and a heftier fall in August. Over the past 6 months, almost 16,000 people have left Australia in net terms. Apart from the times of war, there's never been a time like that, said Secretary Economist Craig James. The economists are hoping for economic growth of 3 to 5% over the next year or two, but getting the V-shaped recovery is dependent on finding a way to open foreign borders and enticing more people to come to Australia, call Australia home. Migration, which last year accounted for about 2/3 of the Australian population growth, is critical to the country's $2 trillion economy. Investor focus is also on escalating Australia-China tensions, though analysts said it was yet to hurt the Aussie, which is supported by a weaker greenback. The New Zealand dollar was a shade weaker at 68.79 after early hitting 69.15. Okay, they even popped up to that, a level last seen in March of 2019. But remember, 68.98, I think so 68.96 is a weekly closing level. The Reserve Bank of New Zealand proved to be the wind under the Kiwi's wings Wednesday, as it reiterated the official cash rate will stay at a quarter basis point until March 2021. The RBNZ also introduced a new funding facility for banks to lower their borrowing costs, saying it would have a much bigger impact on lending rates than trimming the cash rate slightly. We've upgraded our New Zealand outlook. Analysts at National Australia Bank said in a note, a move to 70 cents looks to be ahead of schedule, supported by a change in our RBNZ policy view. Bear with me. So on the dollar holds gains as investors temper the COVID vaccine enthusiasm. The dollar held broad gains on Thursday's investors tempered bullish gains about a COVID-19 vaccine that is unlikely to avert a grim winter in Europe and the United States as the pandemic second wave intensifies. The dollar index rose 1/10 through the Asian session. The euro fell by the same margin, and the risk-sensitive Aussie and New Zealand dollars gained about, or actually says grounded about 3/10 lower. The Europe is also grappling with the surge in infections and new social restrictions, contributing to Germany's economic advisors trimming next year's growth outlook. New York has ordered bars and restaurants to close as early as U.S. cases hit record lows in the absence of a COVID-19 vaccine, or I should say record levels. The risk of more stringent restrictions, including localized and nationwide lockdowns, is real. Sterling licked its wounds as trade talks between Britain and European Union seem to drag on, past yet another deadline, raising the prospect that no trade deal may be reached before Brexit. The moves here for now are put the brakes for a long, precipitous drop for the dollar, which had shed about 10% against the basket of currencies between March and the announcement of the progress on Pfizer's COVID vaccine. Larger moves were held in check as investors await speeches from Fed Chair Jerome Powell, Central Bank President Christine Lagarde, and Bank of England Governor Andrew Bailey. On the relative macro front, Europe is still on a weaker footing compared to the U.S., and we also view the resilience in the Australian dollar with some skepticism. Before cautious moves spilled over, the equities traded into the currency markets. The Kiwi made a fresh 20-month high on the greenback as traders turned less convinced, but the negative rates are a sure thing anymore to New Zealand. Bond markets moved sharply across the curve to price longer odds on the possibility of wins on Wednesday, and yields inched higher on Thursday as the Kiwi rose to 69.15. ANZ Bank still thinks that New Zealand will head below zero in 2021 and said it's now become a bit of a toss-up. And it's clear that going negative is no longer urgent. So with that, we'll go on and move into the analysis. I don't know why this thing popped up like that. Oh, there we go. Okay, take a look at the euro dollar. And you can see here we're firmed up a little bit better, just a tad bit. Looking here with the euro. Let's go and lower this. That may make it easier. There we go. So the euro slid back on Wednesday to 17.44 before slightly recovering. The pair still has the potential to move to 17.32, which will be support with resistance at 18.32. And I think that's getting a little bit overdone, but really this is in case they take one more dip going into Friday. So we'll still keep the 17.32. It seems like it's a little bit of a stretch, though, but in case we do decide to embark lower for tomorrow, that'd be our support area. Resistance is going to be 18.32. You can see we're not moving very far to start with. Really, it's going to be necessary for them to get above the 1787 on a 2-hour close. Let's go and move into cable. So the cable ran, stops above 33 even, rallying to 33.15. The close, although this is the paid close, I don't know what it says the close was below the key level of 32.14. And resistance will be 32.69. I don't know why it doesn't have the support here, but let's just go on and go over that. It did close below that key level of 32.48. Looking at support, we'll just go with the level, which is going to be 31.51, actually a little bit lower. So let's go with the resistance, which is going to be 32.69. And potentially we'll look to dip just a little bit below this 31.51. So we go with the closing bar right there, which is 31.45. And that'll be support. Pretty decent little pair back from this rally above 133 with a goose to stops. Moving on to the Aussie dollar. So the Aussie posted a gravestone doji in 2 of the last 3 trading sessions. We talked about that. The pair is open to a pullback to 71.59. Support on Thursday, and you can see the 71.59 here. Support on Thursday will be 72.29 with resistance at 73.12. And that 73.12 is a bit of a stretch, but you can see here. So 72.12. And 73.12. So the Kiwi closed at another high on this run. Resistance will be, once again, 68.98. Well, actually, we just moved it up a hair. So 68.96 is a key weekly level. All we've done is move this up to 2 pips. With support at 68.15. But remember, 68.96 is a weekly close. And we are below that right now. Moving on to the dollar CAD. So the dollar CAD closed slightly higher on Wednesday, suggesting a short-term bottom is in place. Resistance on Thursday will be 30.97. Well, it looks like we've tagged up there. We actually just tagged a little bit above 131 with support at 29.98. So 30.97. We're just a little bit below that right now. $29.98. On to the dollar peso. So the dollar peso is attempting to stabilize at lower levels with Wednesday bullish engulfing bar. You can see that. Resistance will be 21.62. I meant to say 20.62, obviously not 21. 20.62 was supported. This is crazy. The support's going to be 20.23 because remember that's that key level. So in case they were to break, So 2023 stays the same. The only difference is here it's going to be 2062 for the resistance. And on to the dollar yen. So the dollar yen rallied to the bias chart resistance, topping at 556. I meant to say, 566. Apologize. Remember, our bias chart resistance was 564. So we topped out yesterday at 566, closing slightly higher in the day. Resistance will be 574, with support at 508. And on to the cash dollar index. So the dollar index rallied to challenge at 93.30 yesterday, closing just below 93 cents even. Resistance on Thursday will be 93.24. Looks like today we've made it up to about 93.16-ish maybe. Resistance on Thursday will be 93.24. We supported 92.67, but you can see it's relatively quiet in today's session. And we'll go and move into the cross rates now. So taking a look here with the Kiwi in. This has been on one kind of go. And let's go back to, remember we had taken a look at the weekly chart. We had actually just went a little bit higher. If you look here, our resistance was 72.78, and it looks like that was the high for today. Actually, the high for the session has been 72.76. So I like that 72.78. We're going to keep that. No changes, and support's going to be 71.98. So no changes here. Let's go and move on to the euro pound. Interesting, because now we've gone and formed a little hammer. Not sure why it's not showing the levels on here. Hang on a moment. Maybe I did have it. I must have had it on default all along. So let's go back to default. There we go. So we did go and establish this hammer here. And yesterday we did actually have potential to drop down to 88.64. And the low was 88.61. Oh, okay. The support for today is going to be the closing bar there, and that would be 89.05. With resistance, just go with the levels, 89.68. And this is actually, I don't know why it didn't stick, but we switched that to bearish. And looking at the euro odd, we're also seeing the corresponding bounce here. Yesterday we had this potential to 61.48. The low was 61.41. Same thing. We're going to go with the body close for support on this bar, 61.76. And resistance, we'll go with the high close right there, 62.81. Onto the Euro Kiwi. And this took a pretty good deal dip here, but we did say that we were close into weekly support or weekly levels on these Euro crosses. We saw that, with the Kiwi yen, obviously with the Euro dollar. I mean, the New Zealand versus the dollar. Yesterday we had our support at 70.82. It took a pretty good dip, went all the way down to 70.44. The support once again is going to be this body close. We'll just call that 71.01. Support's going to be the low on this bar right there. You can see it, 72.45. That'll be resistance. And on to the ASEAN. You can see here they ran up against the 77.10. You can see that right here was our bias chart resistance. We don't want it to be that high today. Let's take a look at a 2-hour chart. And actually resistance is going to be right there, 76.82. The 77.10 worked out really well. 76.82 will be the resistance. And support, you can see all these touches coming across these wicks. That's going to be 76.11. And on to the guppy. Yesterday we had it up to 40.46. The market topped out at 40.28. Resistance, just going to keep it simple, is going to be this. I don't think the market's going to look. It's already come off quite a bit. Even this might be a little bit too rich. Let's just go with the closing bar, the close level yesterday, which is 39.37. And support, all these touches coming across these closes, we'll call that 38.43. And to close this off with the sterling odd, saw a decent little bit of a pair back, even from the prior day here. So resistance, or I should say support, will come right across these touches. We'll go with 80.84. And resistance is just going to be this body close right there. Just 82.11. And let's just go and take a look at the Uh, Amir wants me to take a look at natural gas, so we'll take a look at natural gas. Um, let's get there. Hold on. I think we just listed as an NG the last time, which that's going to be the front month, which is the December. There we go. So I wanted to save the level we were looking at. We talked about this level before. Remember, we talked about that key level, and that's actually where they found some support here. That's where we had that level before, right there at that 287. And we've actually we went down there, we tested. You can see right here, and then we just tested the stops just below it, but that was decent support. I remember that's why we still had that level here, and we've popped back. Your resistance right now is going to be right there. You can see it clear as a bell. It's going to be that close. Look at this. You've got this close here and this open, and it closed right there. That's going to be. You can almost go with that level right there, the lower bar, but it's actually right here, 306, 306. So let's go on and that's your resistance. You see how they matched up perfectly? You see? They went to closing bar. Look at that. They tapped against it, and then once again, they moved against it. So it's going to be 3062. If you get a daily close above 3062, then we can move higher. But you can see that's going to be resistance. And why you see like me saying, okay, I wouldn't say the random numbers, but you'll see me say, oh, it's this number. It's going to be this number for today because the market's going to bounce back to these closing bars or where you get the most touches. Sometimes it'll go against a wick. And the reason that is because, as the market falls back, then at the end of a day or at the end of a bar, which is maybe it's a 2 hour bar or whatever, this is where the rubber meets the road and people have to cash in their chips or be forced out. And you can see how important this level and this 3062, which is right there, confluence and really came across close to these wicks, but you can see how important it was. Yesterday, the best the market could do was 3056, and today they actually made it right there to the 306, 3062. They're paring back. So you probably see the market maybe exhaust, not want to say exhaust, but kind of ease back from this. We may end up kind of closing around here-ish maybe. If I don't think it's going to happen today, and actually we've come into the weekend, we've already taken a dip. We've cleaned out these people. You come back, they start to pick up with some bargain buying, but this would be huge if you could get a daily close above 306.20. I don't think we're going to get that. Anything's possible. Natural gas is so funny. I also saw that there's a hurricane did touch down in Florida, so how much of an impact that plays into it, I don't know, but it could have been a stronger move. These are two pretty good strong days here, and today we're kind of quiet. So it suggests that anybody that's long, they're just saying, okay, I'll take my profits against this 3062. And anybody short is going to have their stops just above 3062. So I hope that helps. And you can see Tesla close are rebounded back towards this 418. We'll see where we are in the pre-market hours. Holding pretty steady, and this is on the 30-minute chart. Netflix, same thing here at 490. Let's go move into the others. But I hope that's helpful. Bear with me. Yeah, Mira says thanks, but I was going to say I hope that's helpful as far as me pointing out. I think that natural gas was perfect. You see, and I'm saying as far as saying, okay, I was looking at the daily closes and saying that'd be the resistance and hit it right to the thing. And we see that a lot, not all the time. That's what I'm saying is the bias chart is just meant to give you an area to use in conjunction. Like I think this 1732 is too low. But I said, you know what? Let's use that as a target. Maybe not a target, but where they can go to if they take another dip for tomorrow. I think it's too low for today, but basically what these numbers are, sometimes they do come in close. We saw that with the dollar yen yesterday. Our bias chart was 564. The high was 566. And it doesn't mean it's going to be the actual high or low for the day, but is where do we expect to see a battle come in? Certainly like dollar yen, we had 564 and the high was 566. So we're going to see a battle there where, shorts are willing to step in or long say, okay, you know what, maybe I'll ease off of that. And that's how you want to use this, and use this in conjunction with your own technical analysis so that you can say, okay, well, I do see some confluence. He's looking at some volume coming in at that level. That's a good level. Just like we talked about the Kiwi, 68.96 is a weekly close, and that's why we had that as a little asterisk before. So although we popped above, and I mean, we were below it just a little while ago, but it's going to be pretty tough to get beyond that. That's a weekly close. Anyway, enough on that. Taking a look at Apple, you can see here we're actually at 1944. The pre-market hours are relatively quiet. You can see that Microsoft at 216. Amazon, no big news here. I mean, big news as far as we're not moving too much. We're just relatively quiet. And let's see, Google. A bit of a mixed bag. That's on the daily. Let's go to the 30-minute. Yeah, all these are very quiet in the pre-market session. So that's all we have. We are seeing the NASDAQ move higher. I'm talking about the NQ. We're seeing that pop. Remember, we talked about this in the chat room. I said, hey, look, it's just not responding. It's not pushing. I was saying how it was coming up short on some of these resistance levels. And it suggested to me that this market would weaken. I said, look for a rotation tomorrow. Well, the rotation came in tomorrow, being in the Asian session. We did see this a pretty good pullback. Now we're pushing back up here towards these highs again. We'll see whether or not we can. The next key level would be right in here, which would be 11,968. So we'll see whether or not we can make it up there to challenge it. But you can see it's pretty key, though. You see these touches coming across here. We'll see. I can take a look at, the mirror said to look at Bitcoin. I don't even follow Bitcoin. To be honest with you, if you gave me $1 million, I couldn't even tell you where it's trading at. I knew it. I'll try and see if I can pull that up. Bear with me. If not, then this will be it. Let me. Maybe it might be $ BTC. It's not even coming up for me. Okay, you said try. Okay, this one. Okay, I think that one might be the futures Bitcoin. Okay. I was looking for the Bitcoin Cash, but yeah, I know it does trade the futures. It was really hot about, was it 2 or 3 Decembers ago? Let's look at a daily. Well, it really has continued to push higher. So we'll take a look at a weekly. Yeah, this is when it opened up back in December. Right now, let's look at this weekly close, which is right there, and that's 16,815. So that's where it can get to. You can And you can always get overshoots. But right here, look at that close. $16,815. Now this was a high level right there on the weekly, which is 16,555. So you see here, you got that high from this week, that weekly bar, and look where they closed. And then they turn around and close all the way back up here. And then look what they did the next week. So I would look for this thing to run into some trouble right there at that 16,555. So, but look for some turbulence between 1655, 555, and 16,815. So if we make one more jump, this is where you're going to run into some trouble there. And that'll do it here for the European crossover webinar. And thanks for joining us here, and we'll see you in the chat room.